When you think about investing, most people think about dividend stocks. And for me, this is actually the last type of stock that I would ever invest in. And today I'm going to tell you exactly why that's the case. How's it going, guys? Ryan here today with another stock market video, and today we're talking about why I don't invest in dividend stocks and why I don't think you should invest in dividend stocks when starting out as well. But before we get into that, guys, please remember to like this video, helps me out so much, and subscribe for all the latest content. Leave any questions, comments or queries down below in the comments section. And today, guys, let me know what type of stocks you prefer to invest in. So without further ado, let's get into it. And today, as I mentioned, we're talking about why I don't invest in dividend stocks. And for people just starting out on the stock market, why I don't think you should invest in dividend stocks either. Now, I'm going to preface this by saying I think dividend stocks are fantastic, but they don't suit my current strategy, which is why I don't invest in them. And for a lot of people, dividend stocks are ideal, but for my strategy where I'm trying to make large percentage gains, dividend stocks aren't really going to do that for me. So that leads me into reason number one, slow growth. Due to the fact that these are large companies, the way dividend operating companies typically work is they pay out dividends in replacement of the fact that there's not going to be much growth in that stock. So for instance, you might invest in a large corporation which is dividend paying, a blue chip share, and it only increases in value 5% over the course of a year. Now that's not much growth at all. On the other hand though, you will get a nice dividend payout. That dividend payout though is not going to be anywhere near the amount of money you could have made if you invested in a spec stock in the same industry which is undergoing a large sort of period of growth where you could see 50 to 100% gains potentially. So effectively you're not getting as much money, but you're getting money in a different form, not from the growth aspect but from the dividends. The second reason I don't invest in dividend stocks is because the Capex cost to make it really worth your while to do it is a lot. And the reason being is you need to be able to accumulate a large amount of shares before those returns start becoming significant. I believe you need roughly over $1 million to be making any sort of decent money. So if we talk about 4% average return per annum with regards to dividend stocks, you're talking, if you put in $1 million in, a 40 grand gain per year. And while that's fantastic, that is a huge capex you need to upfront and put down on the line before you start seeing any real returns. If you're talking $1,000 invested, for instance, that means you're only expecting to see a $40 payout per year. Not much money. I'd much prefer to put my money in a speculative stock that once again sees a 50 to 100% gain. Instead of making $40 on your $1,000 investment, you're making $1,000 or $500 on that $1,000 investment. You're going to see a lot more benefit investing in those high growth, higher risk stocks than you would when you're investing in dividend stocks. Now, due to the fact that the capex is large, for me, in my strategy, this is a longer term goal. So effectively what I'm doing is now I'm in those high risk, high growth stocks and I'm accumulating wealth over time, and eventually I'm going to be able to transfer that wealth that I've made from those growth stocks into dividend stocks that start generating me that passive income over time. But as I said, it does not suit my strategy at the moment. A huge amount of capital into dividend stocks all at once to start seeing some decent percentage gains. Now, reason number three why I don't like the dividend paying blue chip stocks is the fact that the global economy and other global factors can genuinely impact these stocks significantly. What you'll notice when you're looking at the stock market is when you tend to see large dips in those blue chip companies, it's because something is happening in the world. most notably recently is COVID-19. The stock market absolutely plummeted. And what you saw was a large amount of investors pulling their money out of those blue chip stocks and the price of those stocks plummeting. So as a result, all your money is going with that. What you did see on the other hand is when the market was becoming a bit more risky, your actual riskiest stocks were going up in value. Investors were putting their money into the speculative side of the market. And as a result, you saw growth in a lot of speculative stocks during that main COVID-19 period at the middle to the start of the year, which was very, very surprising for a lot of people. And typically what you can do is invest in those same sectors, but in the speculative side. So for instance, if you do have your base of dividend paying shares, excellent, you understand that industry, you know the sector, you know exactly what's going on. So take that same knowledge and apply it to the speculative side. Look at those companies where you can go, okay, are these stocks one day going to be dividend paying stocks? That leads me to my fourth point. You can get into stocks early enough to accumulate that large amount of shares without having to upfront a huge amount of Capex by getting in them early. So let me give you an example. You'll find a lot of stocks under $1 right now. In 5 years time, in 10 years time, where are those stocks going to be? They could be $20 stocks, $30 stocks. You don't know, but they're going to grow over time significantly. And what you can do is effectively be in a position where you've got those dividend paying stocks up and coming. They're growing, they're not paying, but in the future that will be their plan. But you're able to accumulate a larger holding at a much, much cheaper value, and you start to receive the returns later on. So you're going to not only see the share price increase over a period of years, you're going to then start receiving dividends on top of that down the track. Focus on the longer term opportunities. There are much simpler ways to accumulate wealth quicker than simply just putting all your money into dividend paying stocks. Get in those speculative stocks early that you know are good, that you've done your research on and that you understand, and you can see them turning into dividend paying stocks in the future, not right now. With that guys, I'm wrapping up today's video. I hope you did enjoy it. Share with me your thoughts down in the comments below, why you invest in certain types of stocks, what other types of stocks you prefer to invest in, and if you do invest in dividend stocks, what's the reason for that now and does it suit your strategy? I hope you enjoyed the video guys. Please remember to drop a like if you did, and with that, I'll see you next time. Cheers.